Happy Monday, everybody, and happy Halloween. I hope everybody had a great weekend and tried to stay as much out of trouble as possible. You know, pumping up, getting ready for that huge open enrollment that's going to be happening tomorrow. So enjoy today. If you're taking the kids out tonight, enjoy a nice night of trick-or-treating. Get a good night's sleep because tomorrow's finally the day that we've been talking about. So happy Motivation Monday. So I thought we'd start with kind of a little more of a goofy Halloween one here, since we're talking about strategies to have a successful open enrollment today. So luck is what happens when preparation meets opportunity. So something fun, something a little goofy just to get us started. So happy Motivation Monday. For the few new people who are on the call this morning, this is kind of what we're going to go through. We're going to hit a quick tip of the week. We're going to take a look at what trends were happening. We'll take a look at who the sales leaders were and were their sales leaders last week. And then we're going to take a look at a sales technique, which is going to be more numbers kind of statistics game today. So taking a look at last week's tip of the week, it was really about some of those changes to those NatGen products. First off, about Wisconsin, short-term no association. The TrioMed and AHCP were discontinued, and then NatGen had that new PPO dental put out last week, which people have had a few questions on. It seems like things are going pretty good. And then they also put out that discount card on the dental indemnity. Now, there are new dental videos out there that are going to be in the training section at AHCP Sales about the new dental PPO product and the change in that NatGen dental PPO product or NatGen dental indemnity product. So if you have questions on those, A, reach out, B, take a look at those videos. Pretty useful, and it's going to be actually kind of important during open enrollment, which we'll get to there in a second. So the tip of this week, excuse me, is hoping something you guys have already been doing. It's really, have you gone on to healthcare.gov? Have you taken a look at those price of those major medical plans? I woke up to this morning a friend in Oklahoma saying, hey, I was paying $627. It came up to, was it $1,250 a month now? Yeah, 100% increase. What the heck do I do? So obviously, me working at health insurance, we've been trying to figure that one out for him. Find the best solution, which will be one of those things we'll talk about today. But if you haven't, go to healthcare.gov, preview the plans and pricing in your area, put in your zip code, take a look at families. The numbers are there. They are huge increases this year, as we've been predicting. Also, on there, just thought I'd do a quick reminder to you about the dates. So tomorrow's open enrollment, 15th last day for the first. January 1st are going to be those who want to make changes, and 31st is the last day of open enrollment. So go to healthcare.gov, play around on those plans, and I really hope you guys have been doing that. So to take a look at the trends. So obviously we had a pretty good uptick in major medical sales last week. We're going to have even a bigger uptick this week. We still had those increases in short-term medical sales, leading with NatGen. Those are about 85% of the sales, so pretty strong NatGen one. As well, increase in accident. So NatGen, the AHCP was really leading in our accident sales product. So we had a healthy uptick in that. Really, the only thing that held steady were our critical illness sales, which is always led by CBL, and then an increase in our dental. So healthy growth in everything. Obviously, next week is going to be a very, very, very healthy growth. But trends going, we've been going up. Keep in mind, what's going to happen is, it's going to blast out of the gate in November. We're going to have a pretty steady sales happens until probably about the 10th or 12th of December. That's usually when it's going to tick down just a little bit. Holidays, things slow down. Not drastic, but it does slow down a little bit. And then coming the beginning of January, it picks back up. So don't be horrified if midway through December, the sales kind of start slowing for you. Don't freak out. It is normal. I've done every open enrollment since it started, so don't judge me on that one, but that's kind of just what happens. So for our sales leaders, so we had two very big leaders as far as it goes in major medical. We had Christopher Helgerson and then Victor Kravachinski. Those two led the major medical sales by a lot. Short-term medical, we had Brian Jarvitz with NHIC. He has held the gold there for about a month. Katia Santamaria, took silver with the NHIC short-term medical, and then Tony Cox took bronze. In the ancillary, which is really what you should start caring a lot about, Brian Jarvitz with American General Life, Katia again with HII, and then Andrew Orlikoff with NHIC TrioMed. So really what's going to be happening is when we start in to taking a look at the open enrollment, it's going to be the ancillary products that are going to be helping make us most of the money. As you've been finding out from the letters with major medical commissions, or last year too, major medical commissions stopped with some of the carriers last year halfway through. That's fine. That's not what we should be banking off of what our paychecks are going to be off of. Really, we should be taking a look at those ancillary products. Those major medical products, those are just what's going to drive the conversation, drive the calls, let those people start talking to you. What's going to really help them, especially if you've taken a look at the plans this year, going to be those ancillary. So one of the big things too, the plans this year on the exchange, a lot of the carriers are using smaller networks on the exchange compared to their plans off the exchange, right? So on exchange plans have smaller networks. They have just the minimum plan design that is needed for those plans to be considered on exchange. So the companies are really trying to stop their losses on that one. So take a look at what the benefits are. There's not a lot on them. Obviously those essential health benefits are going to be on the exchange, but there's those high out-of-pocket maxes that your clients, they cannot hit. They will need those ancillary products. If you don't understand them and if you're not selling to every client, really you need to get up and going, part of the game. So the networks are smaller, the benefits are smaller, their chances of help with going to the doctor are smaller, and the premiums are huge. So really, you need to start getting creative and you need to start helping your clients the best of your ability. And luckily here, we really have all the carriers out there to help you. So we're going to take a look at today some effective open enrollment techniques. These are things that agents have been doing successfully. These are things that we, when I go and do site visits, this is what I will talk about. These are numbers that I'll actually run. Everything that we're going to take a look at today, I ran last night. So these are as up-to-date numbers as I can get you. And we're going to be taking a look at the numbers coming up in 2017. So the first thing for effective open enrollment, and this is going to seem really stupid to you, but that's what I really just said, just add supplements. First thing, let's go back here, there. So just add supplements. It's easy to do. Really what's happening is your client's total exposure is being increased, right? It came from 6850 to 7150. Their premiums are going up, 25, 100%, depending where they're living. They just can't afford when the big what if happens. My friend in Oklahoma there who had the 100% increase is a small business owner, and he's working, trying to get back to financial stability. He's doing this 12-week program on it. He's on week 7 and he was really excited, and then this just completely burst his bubble. Really heartbreaking. So we're going to be taking a look at other options today, and I'll show you kind of what we're going to take a look at. But biggest thing is he can't, if something big happens, he can't afford it. Just can't afford it. Doesn't even have $1,000 in a savings account. Kind of big. So just adding supplements, right? First thing is, let's take a look at some premiums there. So this is somebody who is going to be in Texas. He's a 28-year-old male. He makes $38K a year. With his Blue Cross Blue Shield plan, it's an HMO with a $3,750 deductible. It came to $417.30. Okay. Big thing is, so he has a budget of, let's say, $425, and we are going to work to stay in that. Can he afford the $3,750? No, he can't. Just flat out can't. So if he gets in an accident, if something bad happens, that's going to be really hard for him to do. One of the things that I took a look at, so yes, I raised his total exposure, slightly mind-blowing, but I added on one of those NatGen plan enhancers, right? So his total exposure took it from $3,750 to $6,800, but most of the time what people are going to do, 28-year-old male, he's not going to go in for a lot of doctor work. If it is, it's going to be all those preventative, which we know are going to be covered at 100%. But the plan enhancer, I added the sickness rider and a cancer, heart, and stroke rider. So I'm going to cover accidents with that plan enhancer because that's an accident medical expense. Sickness, so if he gets admitted into the hospital for the first 24 hours, he's going to get a fixed benefit of $7,500, or gets diagnosed with cancer, heart, and stroke, he also gets $7,500. That only came to $67 a month. I added in the top dental, that new NatGen dental, added in the absolute best one that's out there, and it came to $375. Now, first one to keep in mind, taking a look at Blue Cross Blue Shield, their comp, this is Texas, which is one of the better paying commission states for it. Maybe it would be $200 a year for that comp as far as it goes with the major medical. But if you take a look at the second one, that major medical with those two Nat Gen products, the commission on that one's going to be close to double. Taking a look at absolute bottom commission, what we're taking a look at there would probably be $400 a year. So the client is paying less, they're more protected, and you're making more. It's kind of a win-win-win situation. Those are the things that you're going to have to start taking a look at. So with this one, the client would be, gets in an accident, bam. It's going to take his deductible from $6,800 down to $250. Sickness happens, they're going to get a check for $7,500 as long as they're admitted to the hospital for 24 hours. Cancer, gets diagnosed with cancer, has his first ever heart attack or stroke, another $7,500, and he gets dental, so he's going to retain this policy. Pretty powerful, pretty easy, and that's literally just by raising his total exposure and making sure that I'm adding supplements, okay? Really, in the past, people purchased the most comprehensive health plans with low deductibles, low out-of-pocket limits, reasonable co-payments for doctor's visits and prescriptions, and those huge networks. Those plans in general, they just don't exist anymore. And if they did, most people can't afford them. So look at those alternatives. Okay. Second one we're going to take a look at here for effective open enrollment is going to be taking a look at selling a short-term instead of a major medical. There are cases where this is going to be a better fit. I was asked a few times last week if I could do a nice breakdown. So I'm going to do a nice breakdown on the next slide of what it actually looks like. It's great for those that are super healthy. If you're taking a look at those guys who are never going to go to the hospital, they really just want the big what if. They don't need to have, all of the essential health benefits, so they don't need to have maternity as part of their plans. They don't need to have pediatric dental as part of their plans. Doesn't make sense for everyone. For this, short-term medical could be a better fit with the medical coverage and paying the penalty. Kind of mind-blowing, but we're going to take a look at the same guy for this scenario. So again, 28-year-old male, Blue Cross Blue Shield, $3,750 deductible, comes to $417.30. We already took a look at that. Well, taking a look at his situation here, if I put him in a Nat Gen short-term medical plan, $2,500 deductible, 100% coinsurance, lower exposure if the big what if happens, $135 a month. Even if we take a look at his penalty, $700 for the total year, and we take a look at that monthly, which would be $58.33, his total monthly cost, including the penalty, would be $193.82. Half of the cost of the major medical plan. And with that Nat Gen short term, keep in mind, it is using the Aetna Open Choice PPO network. It has that association built in, so if he needs to have a prescription, there may be prescription discounts that are going to be available. If he goes to the doctor, there are those $350 first dollar doctor visit benefits. Pretty good fit. Keep in mind too, with short-term plans, because they are only 11 months long, there's a whole month of premium he's not paying as well. So he winds up saving that. Good savings, great savings. Also commission-wise, what do you make off of a short-term? A lot more than what you're going to make off of a major medical policy. So this could be a better fit for some consumers. So for effective open enrollment, if you are explaining this to somebody on the phone, have them grab a pen and paper. Have them do exactly what I did on this page. Draw plan 1, draw plan 2. Plan 1, put the cost of the major medical policy. Plan 2, put the cost of the short-term medical policy. Take a look at their income. Whatever their penalty is, divide that by 12. Keep in mind, penalty is, as far as it goes, is going to be the 2.5% lowest bronze plan. Nothing too drastic is going to change there. Divide that by 12 too, so you can kind of start making those numbers. And from $700, wow, that's a lot too. Really, it's going to be $58.33 a month. If you can put that away into a separate account when you're paying the penalty at the end of the year, it's not going to be that drastic. It's not going to hurt. Plus, you're going to make interest if you put it into a savings account where you can make a little bit of money off of that. So do this. This is a really powerful sales technique. Some of my best agents do exactly this part. Plan 1, plan 2, you're talking to the person on the phone. Write down the numbers, write down the penalty. Most of the time, keep in mind, all counties, major medical plans are a little different pricing. Short-term is going to be a cheaper option. Know that though before you jump into this. Run your quote before you're going too crazy. First thing is too, when you're doing your fact finding on that one, bam, if you are finding out that they are super sick, you may want to steer away from that short-term medical policy. Major medical at that point would be the best fit. Always do what's right for your customer, but major medical policies aren't a fit for everybody. You know, it's not like a glove, kind of with that O.J. Simpson trial. You know, it's just the glove doesn't always fit. So next one is going to be taking a look at what's short-term with ancillary products. You saw a look at what the heck happened on that last slide. We had so much extra room to play with there. So with it, it's great for your existing customers. Get the okay from those on the fence as well. So when you're taking a look at it, you're just going to be doing a lot of look there. So with this one, we're taking a look at a different couple here for you to help start playing with numbers, because you're saying, hey, you're taking a look at a young, healthy guy. Right. So let's take a look at a couple with 3 kids. So 39-year-old couple, it's going to be the same area around in Texas, 3 dependents. They make $75K a year. The numbers I ran yesterday, they got a $524 subsidy. Pretty good. With that plan, oh, it should say $7,000 deductible in there. So it's a $1,049 plan per month. For a family that makes $75K a year, you know, that's $12,000 a year. That's pretty hard hit there. You know, it's like about 1/7 of their income. So taking a look at the other plan, so if we put them in a short-term medical plan, so $5,000 deductible, lower deductible, 80/20 co-insurance, coming to $527 a month and 88 cents. If we added on the plan enhancer, accidents, they have children. Accidents are going to happen. Accidents are going to happen. Accidents will happen. Huge. Also put on those dental policies. You're going to notice on all of these, we put on dental policies. That's really big during open enrollment. Especially during open enrollment, dental is going to help increase your retention. People are used to getting packages. We talked about this. Packages at work. You know, when they go in, they got their health insurance, they got their accident insurance, they got their life insurance, they got their dental insurance. So these are things that they're kind of expecting. So you can go through, you know, also with this plan, I've had an accident medical expense, here's how it's going to work, especially for $40 a month. I added a dental policy for $80 a month. You know, and if they paid their penalty based off of how much they made, that'd be $135. It came in at $266 a month less. So this is for a family, not that healthy 28-year-old. This is for a family with 3 kids. $266 less a month. You need to play with numbers. This is just doing a short term. As long as they know that they're going to be paying a penalty, do not be shady, be completely transparent. It's going to be pretty good. Also, if you're taking a look at commission, the commission off of the first one is probably going to be around $900. The commission off of the second one for the year is probably going to be around $1,700, $1,800. So your client is paying less. Again, they are more protected. They get more benefits because of that PPO dental policy, and you're making more commission. Again, this is a win-win-win. As long as the client knows that they're paying that penalty, knows they're putting the money away, this is a pretty good plan. Another nice one too that's going to be effective for open enrollment is create an email campaign. So you're going to be selling a lot of your old customers right away, then you're going to be moving into your new customers. Big thing is with the old customers, spend the time to add those ancillary products, right? Walk through the total exposure, let them know about these new great products you have. And for those that don't buy, create a quick email campaign. Nothing too hard. You can pull up all their email addresses if you have a really good customer records manager there. Send them a quick email about what ancillaries you have a quick story about how it works, and then pick one and make sure to follow up with all those clients. We talked about the midway in December is going to be a downtime for you. That's a great time to do it. You know, mid-December, send the email out, probably December 10th, December 12th, again, somewhere in there when it starts to slow down, shoot it out. It'll be a great time to kind of pick up some extra ancillary sales. We're going to get a lot of steam. We're going to get a lot of energy going during open enrollment. Ride with it as much as you can. So have an email campaign. I know it sounds kind of weird right now. You know, we're talking about, hey, here's a way to save money on short term. Okay, that's just reactionary right away. So let's be a little proactive. Let's start thinking about our email campaign. We know what ancillaries we have. We have the time today to start actually creating that email template. If you want to shoot it to me, what you guys have created, I can, you know, give you my feedback on it and make sure it's going to be ready to be sent out there mid-December. And then the last one, my last technique that's going to be really good, and again, these are just numbers that we're playing with, is going to be just add dental, honestly. We're going to take a look there. So It increases retention. It is the most used product, and it is cheap. It is super cheap. If you add one dental a day during open enrollment, just one dental a day, and your commission off of the absolute cheapest dental carried off of AHCP would be about $4.34, which a year become to $52.08. So one dental per year. Take a look at the first year commission, $52. If you help 100 people a year, that's going to increase your paycheck by $5,000 just during open enrollment if you can do 100 sales on that one. So dental is going to increase your retention. It's a product that your customer is going to use, and it's going to increase your paycheck. That is huge. You should be adding dental on every call. It's an easy question. Would you like dental? Kind of like, hey, would you like fries with that? Would you like dental? If not, one of my agents, what he does is say, hey, this comes with dental. The person says, I already have that. Great. He takes it away and just keeps moving on. Add it. It's going to be great. It's going to increase your paycheck. It's going to definitely increase your paycheck. It's going to increase your retention, and it's going to make your life easier. Your customers are going to love it. It's going to be the first thing that they are actually going to use. I hope you guys were able to take a look at those, kind of see the way that I presented some of those numbers for you. Find a way to do that with your clients, especially over the phone. Have them grab out that pen and paper, kind of like what we always say. Grab that pen and paper and you can listen for them wrestling around, and then you can start describing that. So have a good open enrollment starting tomorrow. If you have any questions or if you want any copies of anything today, this will be put up at HCP Sales in the training area as part of those live webinar areas parts, so the video library, and with a nice Ronnie lot. So if you can believe it, your mind can achieve it. If you do have any questions during the week or anything that you need, please contact training@hcpsales.com. And I want to thank everybody for their time. I'm just going to end there with a nice quick poll for you. So if you guys want to fill out the poll before you go, I greatly appreciate it. Have a great Monday, everyone.